Thank you very much, Sean. They're quite difficult to read out, those resolutions, and I think we're all relieved that there's only 18 of them today. We'll try and get more next year. So the deck that we're going to go through today is the deck that's on our website, slightly different order, some slides missing, no new material will be released. If you'd like to read the important notes about the company or the Bitcoin treasury strategy, then please do so on the website. We're going to mix it up a little bit. So Jesse's going to talk to you. Nick and John from Squarebird, that you'll all be familiar with now, that we announced as an acquisition recently, are going to tell you about the business that's now part of Smarter Web as well. But let me just do a quick introduction and then I'll finish up at the end as well. So as you all know, we were founded in 2009 by myself with our operating business, designing and building websites for small to medium-sized businesses. And then we were inspired by the strategy model to list the business in the UK, which we did. Earlier this year, we migrated from Aquis to the London Stock Exchange, and that's a really important thing for us. What we're trying to build, particularly in a market that's fairly challenging at the moment, is a business that's structured in the right way with all of the right mechanisms, built on digital capital, with an eye on digital credit for the future, and a business that we believe that when the market allows us to expand rapidly, will be perfectly positioned for that, without obviously making any guarantees over that. Obviously, it is challenging out there at the moment, but as I say, we do think that we've got everything in the right place. But we are one of the biggest companies in the world, the 29th biggest at the moment in terms of Bitcoin held, and we are by far the biggest in the UK, whilst still looking for more. We've got a great team, and some of you will have had the chance to meet some of the other members of the board and the management team. And if you want to chat to anyone else afterwards, find them. They'll be more than happy to speak to you. We've worked really hard at trying to build the right structure with the right governance to take the business to the next level, which is what we're all very much focused on at the moment. Before we then go on to the 10-year plan, you'll all be familiar with the recent news that we put out about the index inclusion that will take effect from the end of this week. That's another small tick in the box. We see it as a pathway towards the FTSE 250 and then in time, the FTSE 100. And there's some more commentary on that further in the deck. So before I hand you over to John and Nick from Squarebird, let me briefly tell you where we think we're at on the 10-year plan. Less than 12 months after becoming a public company. So we're focused on the organic growth opportunities as we acquire more businesses over time. When we can find the right businesses, they'll obviously form part of A as opposed to part of B in some ways. My colleague Mario, who some of you will have met, is very focused on trying to push forward the acquisition strategy for us. We've had some more conversations and we're working very hard to find the right businesses. But as we've always said, we will not rush that and we will not do a deal if we do not think it's the right one for the whole group and obviously its shareholders. And then, of course, our Bitcoin treasury strategy, which Jesse's going to talk to you about in a moment. So on that note, let me hand you over to Nick and John, who I'd like to introduce you to. They set up Squarebird. They ran it as a successful private business, in an economy that has been challenging, for some time now. It's a great business. We were really pleased that they wanted to join up with us, and we look forward to having them as part of our team over the years that follow. So, John and Nick, over to you.
Thank you, Andrew, and good morning, everybody. It's a huge honour to be here and incredibly exciting for us to have become part of the Smarter Web company and the journey that Andrew and the team have laid out together. The purpose of this presentation is for me to give you a bit of background on the company, an overview of what we do, the clients that we work with, the type of clients that we are targeting, and then I'll hand over to Nick, who will give you further detail on the core business model and how we intend to grow the business with the backing of Smarter Web. So we are a digital agency with a primary focus being web design, development and maintenance, with a number of supporting services in digital marketing, such as search optimization, paid media, but also brand strategy, brand development, and consulting. We're far more than just a web design and build provider. Our aim is to provide clients with the ability for us to be an extension of their marketing team, supporting them with our skills on a retained basis, and the success of that has largely provided the revenue and dependable cash flow for us to scale the business to the size that it is to date. We founded the business 11 years ago, which over that period of time we've designed and built around 400 websites and continue to manage about 300 today. This was all made possible by building the team from just myself and Nick all the way up to 25 people across 3 departments of design, development, and then the marketing partnerships. The business growth has been very organic to date, with most of our significant projects landing as a result of referrals and recommendations. Initially from projects that we did with smaller businesses, but in more recent years we've transitioned to a focus of working with bigger organisations, which very much represent the new projects that come on board today. We have an outstanding reputation as an agency for delivering websites with a focus on high-end design. Our website itself proudly displays a range of exceptional testimonials from highly respected businesses and brands, but we also hold over 150 5-star Google reviews, which is a huge competitive advantage for us when you think about how long a web design project can typically take, and how long it takes to build up that kind of public reputation and record. It's a big deal for us, and it's very visible, certainly around the Southwest. We've been profitable every year since our inception, and we've always had much above average margins for our industry. And I believe that that is due to focusing on scaling the repeat revenues that we're able to within the business, which make up over 40% of turnover, maintaining high levels of quality, and building an outstanding team of highly skilled people who all embody our culture and approach of high standards and strong relationship building. So in terms of who we work with and what kinds of business we're attempting to attract, naturally being based in the Southwest, we have a strong foothold here, but we are increasingly working further afield nationally as well as internationally, with projects recently delivered in Japan, Malaysia, the US, Europe, but mostly in the UK. We work with established organisations, charities and funded startups, entities that usually already have a website and need direction and expertise that will enable them to operate at the next level, or perhaps they need to go through some kind of evolution or revolution in terms of their brand. The most significant development in our client portfolio, and where we have the most success in the market now, is working with organisations of a certain size, usually with turnover of £2 to £20 million. It's typically our sweet spot, but of course there's no real limit to that, because a website has very different purposes for very different kinds of organisations, different levels of importance and things like that. So yeah, there is no real limit, but that tends to be where we have the most success. We're sector agnostic, so we don't typically market ourselves or pin ourselves down to certain sectors. However, we do have a strong presence in certain markets, such as professional services, education, consumer goods and industrial brands. A huge strength of ours is low client concentration, so no client exceeds 10% of our annual turnover, which reduces dependency on any one contract and therefore reduces risk. And finally, one major benefit of being backed by the size of SmarterWeb's balance sheet is that it will enable us to tender for bigger projects that demand that our company is of a certain size. So we're now able to pursue projects that in the past we perhaps may not have been able to. Here's some of the brands that we've worked with, some local, some national and international, but many that are recognisable. And we now aim to add more exciting names to that list as part of the new phase of Squarebird. So that's it for me. I'll hand over to Nick, who will talk you through a bit more in detail about our model.
Perfect. Hi guys. So next I thought it would be good for us to run through the model and how we typically work with our clients. On the right hand side you will see a cycle diagram. Now from a top level this essentially covers our service offering, and you can see how it works as a continuous cycle rather than a linear process. The key idea is that each stage feeds into the next. So the strategy informs the brand shapes the website, and the website becomes the platform for the ongoing support and the overall marketing activity. So instead of a single project with a clear endpoint, this becomes an ongoing relationship where each phase creates opportunity for the next. The vast majority of our inquiries start at the website phase, which is key as this is usually the kind of hub for a lot of our clients' digital marketing activity. However, the beauty of our model is that there are multiple entry points. So some clients come to us at the brand stage, some come to us with a pre-established website and just need hosting and support, and then we can move them around the other areas of the cycle. The important thing with this approach, and I think John mentioned this earlier, is that we become more of an extension to the team rather than a supplier. We typically find that most progressive organisations need to go through this cycle around 3 to 6 years as their strategy, their offering, or the commercial landscape changes. So just to discuss some of the growth opportunities. Firstly, we expect to see continued growth, organic growth across the business through our usual lead generation activities. At the same time, we hope to continue to move up the value chain, landing bigger projects for bigger organisations. One of the biggest opportunities, I think, sits in our hosting and maintenance offering. It's a highly scalable service that benefits from both the websites that we build internally, but we can also onboard from other agencies and other organisations. We're also keen to work further on this with regards to working with more mission-critical sites, which require more advanced SLAs. I think John mentioned raising the profile through the Smarter Web company is obviously a big opportunity. And as John mentioned, the balance sheet element definitely does enable us to tender for more larger projects and perhaps more public sector work. There's also opportunities to grow through acquisition, either buying agencies similar to our offering or through purchasing client banks and integrating them into Squarebird. 2026 will also see our brand evolution. Now, this is something we've been working on for around 12 months. We've conducted some real in-depth strategy work around Squarebird, our offering, but also looking at the sector as a whole and hoping to shape the brand fit for the future. And finally, we see an opportunity to develop more paid media activity and sector-specific campaigns. This will allow us to target industries more effectively, especially those industries where we see strong commercial opportunities, such as education. And that's it, a very quick tour of Squarebird. I'll thank you all for your time, and if there's anything that sparked any ideas there, or you'd like to have a conversation with John and I, please grab us after. Thank you.
Great. Thank you, John and Nick. So we are a web design company. We are also a Bitcoin treasury company. As you all know, we believe that Bitcoin is the best asset in the world, and we think that a strong balance sheet is built on Bitcoin, and we want to accumulate as much of it as possible. It's our preferred treasury asset, and we believe that we have the ability to increase our Bitcoin ownership and especially our Bitcoin per share by using capital market tools over time through a series of transactions, which has been our strategy since going public and will continue to be our strategy into the future. So I'll talk a little bit about Bitcoin and Bitcoin treasury companies and Smarter Web as a Bitcoin treasury company. So there are different ways you can get exposure to Bitcoin. You can hold Bitcoin in an ETF, you can buy Bitcoin-related companies, or you can own shares in a Bitcoin treasury company. We believe that the Bitcoin treasury company model offers the most attractive way to get exposure to Bitcoin, because the only thing better than Bitcoin is more Bitcoin. And our view is that the mechanics and tools available to a Bitcoin treasury company to increase Bitcoin per share make it more attractive than any of the other ways that you can get exposure to Bitcoin. However, this comes with volatility, which feels great on the way up, feels less good in downtrends, as we're all aware recently. But volatility is vitality for Bitcoin treasury companies and Bitcoin in general. So this is my personal view of Bitcoin's volatility and how it moves as a market. Bitcoin is cyclical. It goes through cycles of sentiment. It feels great at times, it feels terrible at other times. And Bitcoin treasury companies, as we've seen, are downstream of Bitcoin sentiment. And my view is that in times when people want more Bitcoin, the premium, the MNAV levels for Bitcoin treasury companies can go up. And in times when people want less Bitcoin exposure, those premiums can evaporate. And that's okay, it's cyclical, and there are opportunities at different stages of those cycles to execute on our strategy to increase Bitcoin per share at any level. Of course, it's a little easier when MNAVs are higher. So the net of that is that at different times there will be different levels of MNAV, of premium or discount to our net asset value, meaning our Bitcoin treasury. This is our view of how investors value a Bitcoin treasury company. Of course, there is the hard and fast value of your Bitcoin on your balance sheet, but subjectively at all times, investors are thinking about and evaluating the expected future growth of Bitcoin per share and weighing that against the expected drag of admin of a public company, of an entity, rather than just holding Bitcoin themselves. On average, our view is that there will be a recognition that there's the capacity to increase Bitcoin per share over time. And on average, there should be, in our view, an MNAV premium that we can then utilize to make the most of the strategy and harvest to increase Bitcoin per share. But at times, the subjective valuations of those two key buckets will be different. So, when people are bearish about Bitcoin or sentiment has evaporated, they are similarly unenthusiastic at times about the capacity to increase Bitcoin per share forever into the future for Bitcoin treasury companies. And it might look like something on the left, which is closest to where our current MNAV is now. But at other times, it'll be neutral or even bullish. And the expectation of future growth in Bitcoin per share may be quite high, and the willingness to pay for participating in that may be quite high. So, all this to say that it is cyclical, and there are times when it will feel great and times when it won't feel good. And that's all part of the volatility that a Bitcoin treasury company delivers, which is the essential element for performance as an asset class and for portfolios. So taking a little bit of a step back here and saying, so Bitcoin is early in its monetization journey. This is the current state of where Bitcoin is as an asset class in the global asset landscape. It is still just 0.2% of global asset value. Michael Saylor thinks that over the next 20 years, that 0.2% will grow to be 7%, which would be a 35x relative performance relative to all these other asset classes. And he also thinks that the end state of that may be as high as 50% of global asset value. But this is for the world. And what's really relevant to the Smarter Web Company is the UK. So how much value is in the UK sitting in traditional asset classes that is not yet in Bitcoin? These are rough estimates, but this is our view of what the UK asset landscape looks like. The UK commands 6% of global asset value, but it is a financialized economy, which is really the legacy of the British Empire. And the equities bucket is 9% of global equities value, and the money bucket is 10% of global monetary value. That's because the UK is an international banking hub. It's the destination of choice for much of the world for where you keep your money. And those two buckets matter a lot for the Smarter Web Company, because we believe that Bitcoin will continue to outpace growth in all these other buckets. We believe it'll grow at 29% a year. That's Michael Saylor's expectation. We share that. In which case, the Smarter Web Company's balance sheet will grow at 29% a year, plus whatever we can add on top of that in terms of growing Bitcoin per share, which would make the Smarter Web Company a extremely strong performer relative to all the other equity options in the UK or anywhere, and also gives us the opportunity to tap into capital in the money market and in the fixed income market here that might be interested in Bitcoin-powered product offerings in the future. Expanding a little bit on this, as you all know, London has a proud history in finance. It is the world's number 2 financial center, second only to New York. And so, the UK, despite being a 0.5% of global land, 1% of population, and 3% of GDP, is the second most important capital market in the world. And despite that, London has lagged in terms of Bitcoin products. Smarter Web Company being the first public company with Bitcoin treasury. There still aren't any Bitcoin ETFs. SIPs and ISAs still have trouble getting access to Bitcoin exposure, and there are still no Bitcoin-powered perpetual preferred equity offerings in the UK. So that means there's a big opportunity for this a very important capital market where a lot of the world's value sits. And if Bitcoin is going to be this strong performing asset in the global asset landscape over the next decade or two, there's a big opportunity for the leading Bitcoin treasury company in that capital market. And we see ourselves as earlier in the life cycle of the leading Bitcoin treasury companies in other capital markets. Strategy in the UK has been at it for 5 years, in the US has been at it for 5 years, Metaplanet for 2 years, Smarter Web Company now closer to about a year. So we're early in our journey, and we think there, as you can see from the orders of magnitude of growth that these other companies have achieved, we believe it's possible to follow those trajectories. And we believe we have the right team to do this, between the operating business and the very authentic British story of entrepreneurship and governance excellence, as evidenced by Sean's heavy lifting here earlier. And then on the other side, the Bitcoin credibility and experience that we bring to executing this strategy. We think we have what it takes to continue following those other leaders globally. And as we've seen over the last really 9 months, the Smarter Web Company has emerged as the UK's leading Bitcoin treasury company. Started as the first, maintained that lead the whole way. And at this point in time, we have not only 430% as much Bitcoin as the next closest Bitcoin treasury company in the UK, but also vastly more liquidity. And that's thanks to our shareholders who have conviction in our strategy and our ability to execute on that into the future. And that is a real differentiator for us as a company, and where I will hand it off to Andrew to wrap us up.
Thank you, Jesse. Always very, very good. So I just wanted to briefly talk through some of the highlights, but when I do this, I want to stress that, we're proud of what we've achieved today, and we couldn't have done it without all of you. But we're more focused on the future. What does this opportunity allow us to then do? That's the point of it. So in 2025, we were the best performing UK equity, taking the cut-off at the end of the calendar year. We've got approximately 2,700 Bitcoin on the balance sheet, which is quite good. And we've raised almost £250 million. The share price has had a considerable amount of upside and then a considerable amount of downside. But it's still, very much up on the original IPO price whilst delivering considerable Bitcoin per share growth. And we're doing our very best to try and get that heading up on the path that we expect it to follow. Clearly, when you hold so much of your assets in Bitcoin, you do need a bit of help from Bitcoin, and we're pretty optimistic about that right now. As Jesse said, we have got ourselves into a good spot in the UK, and thinking about things that we're going to do in the future, I think that we've actually got ourselves in a unbeatable spot for the future in terms of the UK markets and what can be done there. We won't rest on our laurels though, and we work every single day, 7 days a week, to try and push the company forward. Again, Jesse pointed out that the liquidity is something that we're very, very proud of. Over £1 billion worth of stock has been traded, which is quite a lot when you think that when we first listed, our market cap was something like £3 million. We'll try and get that liquidity up. I'm hoping that the index inclusion and the other things that we're planning over the coming months will assist with that. Liquidity is so important. If you're a Bitcoin treasury company, without liquidity, you have nothing. Part of that was the uplisting to the LSE, which we were really pleased to be able to share with many of you. That was good, and that was only, I think, a month ago now. Of course, our community of shareholders on X, good times, bad times, they always show up, just like we always try and show up. And then we're trying to increase our position in terms of the retail investor support. On the last report that I saw, we were the 10th most traded stock by retail investors. If you adjust that by market cap, we're probably the most traded stock, though. The one next to us on the list was Marks and Sparks. Clearly, they've got a bigger market cap than us at the moment. So where are we trying to go with this? You're all familiar with the 10-year plan. And what I've said since the start, and I'll say it again today, is that we want to be one of the largest companies in the UK. And when we're one of the largest companies, we'll then change that to we want to be the largest company in the UK. I believe we're well on our path to FTSE 250 inclusion. Getting into the indices, which we were delighted to announce, is the start of that. What we need to do this year is we need Bitcoin to help us out, and we need to continue executing our strategy. So that's organic growth, acquisitions, and accumulation of more Bitcoin. I personally think that we've got a good chance of achieving that this year, but that's not a projection, that's just my personal opinion. Once we've done that, you can see the other milestones. But let's focus on the first one, and then after that, we'll focus on the next one. So it's great to have goals, but you need to have a way of getting there, a credible way that you can work towards that is ambitious, but also achievable. So this is how I look at the pathway to success over the next 10 years. So the ticks are things that are completed, the dotted ticks are things that are under progress, and then after that, the next things. So we uplisted to the LSE, which I've said to many of you is a structural event. Everything that you do in a company is about designing things so that it works, in good times, bad times, flat times. We've fairly aggressively scaled our Bitcoin treasury, trying our best to increase the Bitcoin per share, using different things that are available to us. You saw on Monday this week, we announced the the results of the voluntary warrant buyback. That got us roughly flat for the quarter, still a slight negative. But that's in a very tough quarter. And I was looking at some other companies actually this morning, and I think it's been hard for us all. We're also trying to establish the investor base. So the way that we look at that is retail and institutional, UK and global. Jesse and I spent 2 days in London earlier this week trying to push that one forward on the institutional side. And we think we're getting there. I think, as I've said once or twice, you know, the support is there, but for some of those people to take the final step, we need them to have more confidence in the market. And that's why I'm watching Bitcoin like a hawk right now, because as it increases, hopefully, through the 70s, I think that we'll probably be at that point where people see it for the potential that we all believe in. And obviously, we've got a range of capital market fundraising strategies. We could raise a lot of money right now if we wanted to. I don't think any of you would thank me for that. It would be a fairly scummy deal on fairly crap terms. So as I've always said to you, I will not do that. We explore all options. We look at them all of the time. We'll speak to almost anyone. But it's about the right capital at the right time with the right structure. And we think that we've got a very, very clean capital structure. And we think we've got a very good pathway forward. You know, without spoiling the surprise for you, if you look at something like Strategy, what they've done, which we can all learn from, is they've explored lots of different things, starting with pivoting to a Bitcoin strategy, and most recently with what you've all seen with Stretch. Now, what they've done between roughly 5 and a bit years ago and today is they've explored lots of other things, you know, convertible bonds, et cetera, et cetera, et cetera. And they've got a model which there's no secrets about. You know, they've told everyone who wants to listen what they believe the optimum way of running a Bitcoin treasury is. So it probably won't surprise you that we think fairly similar to them. And what's the point of doing all those things in the middle if you can just take the results and implement that? I think that's one of the reasons why we grew quickly last year, apart from the support from all of our fantastic shareholders. It was having absolute clarity of something that's in a new industry that works. So that's what we executed. And I'm looking forward to being able to talk a little bit more about that in the future, which brings us nicely onto new capital market products, expanding the access, which is done through more communications, more conversations, becoming higher profile, getting into the indices, so on and so forth, building out that capital markets toolkit that we like, and then most importantly, not over a month or a day or even a quarter, to be fair, over the coming years as we progress to year 10 and then beyond, we want to have a consistent track record over the long term of delivering Bitcoin yield, because as we like to say, you know, what's better than Bitcoin? More Bitcoin. The way that you do that is by Bitcoin yield, but doing something in a quarter, you know, it's okay, but you know, you have to be able to do that over the long term. In a good market, a bad market, makes no difference. You need a consistent record over the longer term. And then if we can achieve all of that, we'll find ourselves in a position where we've got a global investor base, perhaps in some other indexes outside of the UK once we've achieved that. And I think, to me, that's what success looks like, and that's what we want to do. So on that note, maybe we'll open the floor to any questions.